you have to be a risk manager, like a literally professional risk manager. That should be another priority for you. When it comes to risk managing, you're not just managing a risk, you also, because many people are good at risk managing. Many people you know how to set your stop loss. You are very good at that, and once the trade hits your stop loss, you're out of a trade. That is good. But there's another aspect to risk managing, and that is called the reward managing. You must learn to manage your profits as well, because if you're good at managing your risk and you're not good at managing your reward, you will not make money in the long run. So you need to be a good risk to reward manager. Okay, so before you enter a trade, you must predetermine how much you want to lose for that trade. And if you don't want to do money value, you can say, okay, for this trade you must know how many percentage you want to lose, if that makes you feel better. Let's say you want to lose a percentage for a trade. Before you enter that trade, you must determine how many pips your stop loss is going to be. You must give yourself enough room in case there's a pullback into your area of entry and your trade is sitting in a loss for a period of time before it goes back in profit. So your stop loss needs to have enough room before you even think of entering that trade, so that you don't get stopped out and feel the need to get back into the trade. And by the time you enter the trade, you're more relaxed. You've made sure you've checked at least 3 things off your list, that okay, these are the 3 things I need to see before I enter the trade. And once you check those lists, you predetermine how much you can afford to lose for that trade. And then you also predetermine how much you can potentially get for that trade, which is called your take profit. So if you're gonna do a 1, 2, 3 risk to reward, you're risking 1 to get 3, risking 1% to get 3%, or risking 2% to get 6%. That must also be predetermined. And once your trade is in profit, you must learn to manage your profit very well. Sometimes you might have to ignore a trade for a long time when it's in profit, because if you're constantly checking a trade while it's in profit or even while it's in loss, you will feel the need to react to the randomness of the market. Pay attention to the word I used there, the randomness of the market. The market is so random. That is why it's very difficult for day traders to make money. That's why people like all the billionaire investors, millionaire investors, they literally say day trading is garbage. There's no way you can make money with day trading, because they understand the randomness. But in this randomness, me and you, we have managed to find a way to see the potentials of us actually making money. To see the potential of the market and to see that, okay, it's actually possible to make money. Don't screw that up. Don't watch your trade while it's in profit. Don't watch your trade while it's in a loss. Give it room to breathe. Because if you're constantly watching your trade, you're gonna react, to any sudden move, any sudden spike. You will feel the need to close the trade prematurely. And what happens when anything happens prematurely? It's not yet mature, and there's a very high chance it's gonna die. So don't close your trade prematurely. Make sure the trade gets at least, very close to your take profit before you exit the trade. Because if you're constantly taking losses in your trades, and you see a trade in profit and you close it prematurely, it's not gonna make up for those losses. So you've got to be patient. Me, I've learned to actually not watch my trade. So in the morning, if I do enter a trade, I'm not gonna check that trade until maybe 2 hours before the daily candle close, because I'm a day trader, and that's when I decide what I want to do. Do I want to leave the trade running until the next day if it's still in profit, or if the trade is still active? So for a couple of hours, I try as much as possible not to check the trade, because I've already set my stop loss. I already know what I can potentially lose if anything goes wrong, and I know what I can potentially win if something goes right. So a couple of months ago, I did set a trade, and that entire day I was living in Houston back then, and there was this blackout that happened. There was no lights, none of that. And before that happened, I entered a trade, and after that I couldn't connect to the Wi-Fi, and for 24 hours I had no idea how my trade was performing. And when the light came back, the trade already hit take profit. It was a 1 to 6 risk to reward, and that felt so good. And since that day, I told myself, hey, let your trade run. It's better not to watch your trade, because what's the worst that can happen? There are two things that can happen. Either your trade hits stop loss or it's on its way to hit and take profit. So it's good to have that set and forget rule. That helps you to be a better risk to reward manager.